Okay, welcome everyone. Welcome to the Hurley Investments Market View Commentary for the last opportunity that I'm going to have to be with you for 2020. With that said, I sent out some gifts. If yours hasn't come, it'll be on its way. But for those that are clientele, really quickly, I sent out cards and I said one of the items is a fraud. So with that said, what do you think is the fraud item that those of you or clientele may have received? Any ideas? All right, well, Lee, you should know because you asked. Yes, recordings are available, Lee, at myhurleyinvestment.com. In fact, if you ever want to hear any of these over again, myhurleyinvestment.com, www.myhurleyinvestment.com, and you will find everything that we needed. Right there, you'll be good to go. I don't know why the trade findings doesn't have that one, but I will work on finding out what's going on. You have years worth at myhurleyinvestment.com, so please enjoy them. Okay, I sent out some. What I do? I sent out some silver, and one of them is a fake. And here's how you know: when it says quarter ounce or when it says silver on it, they're fake. If they say 0.999 fine, they are real. And that's the difference between the two. I was trying to make it funny that I was saying, hey, one of these is a fake and one of these is not, hoping that you'd know that I'm not a fake. And hopefully your returns are stating that this year, where you can see how the process works, where you can see the opportunity, where you can do your own math and say, hey, you know what? If Boeing gets back up to this, if Baidu gets back up to this, if Under Armour gets back up to this, Apple, Disney, if you can work those numbers, you'll go, oh, now I see why this works, how it's important, and how much money opportunity there is in collar trading. That's the key to what we do. With that said, the Hurley Investments coin are 0.999 fine. That is fine silver. It is real silver. If we were to take a quick check at, let's change this. Let's go to cnbc.com, gold. That is worth $26.44 today. There is a day it might go back up to 50 bucks. 52, I think, is the high for the last 50 years. So I'm giving you a little investment. Thank you for being my clientele, and off we go. For this week, market recap. We rose 1.7% last week to finish at a fresh high. We had great looking futures today. The futures look good. It got beat down because there might be a strain in Europe that's not reacting to some of their, some of their vaccines. Again, I think we'll get a sugar rush from stimulus. We should be good into the end of next year. That is my expectation. Obviously, today as a whole, kind of nice. Our market was down 0.39. As a whole, we were up $81,000. It really comes off of banks. You'll see I was trying to get some new JP Morgan trades in there. I'm looking for a June 150, 155, 165 with a January 22 $90 long call. I'm just redoing the trade that we set up. It'll probably be my first trade coming back at the first of the year as well. But that's what I'm looking for. That's what I am trying to get done. Our big gains today were obviously Bank of America. I believe we've added some shares to Bank of America as well. Next stop for Bank of America, now that they can pay dividends again, I would expect, and buy back stock, I would expect Bank of America to get to 35 pretty quickly. In fact, very quickly. If you take a quick look at a chart, we still even have room till it's oversold. So it wouldn't surprise me to see it get up to 32, which would be about a 6.66, 6.7, 6.8% return. Level off a little bit, then go up higher. The key trigger I would expect to where it's going to come around is that resistance level at 32.47. That would be where I think it's going to struggle, but you pretty quick trade that you could do if you wanted to get into Bank of America. My thought process today was to go over goals. As we're looking at goals, I send this out every year. And I think as SMART goals, you need to consider what is realistic and what is not. And understand in a stock market, a goal might have nothing to do with your smarts in the stock market, might have nothing to do with how good you are at picking stocks. It's just your effort might have no reflection whatsoever on your result. But talking about goals, the key is a lot of people go for too much too quickly. Believe it or not, there are some that lost money in 2020. This year, I know people that are down in that 5 to 7% range. That's kind of sad because S&P year to date is, that doesn't look right. They say it's 14.37. That does not seem right though. I could be wrong. I'll be down more than 13. $14.71. All right, we'll buy it. So if they're down 5 to 7%, that's a 21% difference. What do you think the cause for most of that is? How could you be down 7 if you have a 14.71% up market? Any ideas what's killing them? Thoughts? If you don't know, type some question marks in because this could be interesting or important. If someone is down this year 5 to 7%, what was the problem? Okay, I see a couple question marks coming in. Buy and hold or sold at the bottom. So those are really good answers. Yeah, some people got out when the market was down 28%. That was the number one issue. They got out. By the time they got back in, sorry, trying to get down to what I want to get to you. Well, it would help if I had the charts in, so let's get them in here. For some people, and I think it's a little interesting, but for some people, for crying out loud, Hurley. Did not do a good job of preparing. This is only the 6 month, so this isn't going to help me. Let me get these put in here really quick. But there were some people that got out, plain and simple. They got out in March. They had enough. It was down 28%. They got out and they bailed. Any other ideas on how you could lose money? Because there is one more way, which I found very interesting. Close, poorly managed portfolio. So the short answer there is, of course, but actually what a lot of people did, and it was awful timing. I'm going to change this out to the 11-month period. There's some people that are in the 60-40 bond / stock mix, where it's 60 bonds and 40 stock, or a lot of people did a rollover in this time frame. More, to be honest with you, when I'm checking dates, more here at the beginning of April for those 3 days, right after a quarter, and a lot of people rushed into bonds. Yet bond yields and government bonds and munis literally went down in that period of time. So while the stocks went through and recovered, their bonds went the other direction. Gupta actually said something that's pretty interesting as well. Some people shorted the market, and they're upside down as the market came back up. With that said, I personally don't know anyone that did that, but a lot that I know got out in this range and didn't get back up to here in August. Oh, I'm going to miss the summer doldrums. You don't want to be in summer. From May to September, you wouldn't want to be in the market. Well, from May to September, at least on the S&P, we're talking about 2,800 up to 3588. That's a pretty phenomenal move. I mean, in all honesty, that's 20% of the move you missed. So if you got in after taking a loss and you got in here, took your loss, and at 37.26, you haven't made a whole lot. That is why we collar trade. Whatever we can make up on the way down. Not that it was penny for penny ever, but whatever you make up and convert to stocks gives you some exponential growth for the way back up. It has been a pretty amazing year for a lot of what we do. With that said, too many people that I know that lost money, even if it's 5 or 7%, are going to try to make every single bit of it up, and they're going to do it all in January. Every penny they're going to make up in January. And you should scratch your head and go, I don't think so. Technically, I think it's January 5th is the end of the Christmas rally, and it's just not going to happen. It would be nice to be able to make back everything, but you don't go broke collar trading. It may stress you out. It may test your patience, but anything you make up on the way down is a profit when things come back up. I created this little acronym, the SMART goals. When you're setting goals for next year, the S is keep it simple, specific, and schedule it out. I use the KISS principle, keep it simple, stupid. You need to set something realistic. And if we're going to go through the same thing we did this year, next year, or even worse, considering what might happen to businesses in 2022, you have to be realistic. Maybe it's simple that you try to do something every month. A goal has to be written down. You have to see it. And it was interesting because last year, as I wrote down my goals, what an amazing year. And this year, I far surpassed my goals. But I've got my goals on the inside of my planner. I've got my goals on that's my son. I got my goals on my car window, and I've got my goals on my bathroom window. Guys, hold on one second. I just make sure everything's okay here. Hey, what's going on? Okay. Yep. Yep, you can still drive. We just need to get that replaced sometime. Look over your shoulder on your left-hand side because you won't see cars behind you. Alrighty. Bye-bye. Okay. Kid just broke his rearview mirror. His driver's side mirror, checking to make sure he can still drive. Whew, let's say last time he called me, he got T-boned. But it's because he pulled out in front of cars. So sorry about that. Here we go. Specific goals. You need to write them down. You need to be able to see them. For myself, I put them on the back of my front door. I've got them in my planner, and I've got them posted up on my bathroom mirror. Every day I brush my teeth in the morning and at night, I see my goals. As I leave my house, I see my goals. If I need to, I can pull them out of a planner to see my goals. I've done everything I can to put those goals in front of me so that I cannot ignore them. I'm actually trying to see them roughly 10 times a day. If I can see my goals 10 to 12 times a day, they're constantly in my head, and I'm always paying attention to what's going on. Specific, some people pinpoint a goal, as I call it, but you want to be specific on what you're trying to get to, and you want to schedule it out so it's in a realistic time frame. Then goes to M for measurable. As I talked about specific, how'd I say? You're going to set goals for different time periods. A pinpoint goal is a certain number that you're trying to reach. Usually if I'm setting a pinpoint goal, it's my minimum. It's my minimum return that I'm looking for on, how would I say, on the low end of my range. And the reason why is because sometimes, as I say, on bullish years, 7% is easy. A 7% return could be considered easy. With that said, it's pretty neat when you can go above and beyond a typical 7% return. When I'm talking about that, it's kind of neat if you can have this kind of return for a year. Now, the issue with this kind of return for the year, a 55% on a $50,000 portfolio, excuse me, on a $500,000 portfolio, you need to give it time. You need to give it time to get this kind of return. This is probably a 2-year portfolio. Been in it for a full 2 years, so we had a year to gather some positions. We had a year like this year to gather some positions. The neat thing is, this kind of return you'll never get with traditional investing. You'll never have a chance at a 55% return on a 6-figure salary. Net account value is 788. You'll never get this kind of return doing what the everyday market does. It's not available to you. You're going to not ever, if rarely, beat the index, and the fees are ridiculous. This is opportunity collar trading. If I can grab one more, I think is pretty amazing. Let me put you guys on pause. It is a smaller account, but I love it. Look at the volatility in this one, right? The volatility, huge, but an 88% opportunity return. That's measurable. But that measurable shouldn't start off with a 50, a 60, and 88% return. That doesn't happen every year, which pulls me back to attainable. It's not attainable to spread trade 100% return or 120% return. It's not possible to spread trade a monthly dollar figure that you need every single month. The market just doesn't work that way. It's not attainable to have this be a job for you when you treat it as a hobby and you work another job. You've got to make it attainable. You have to have the backup behind you that shows, hey, this is real. Realistic and relevant. I can't speak. Always want to make 50% return or not. Some years like this past year was quite close to being at that goal, if not beating it. But real life, to expect it every single year, not realistic. Again, you've got to put yourself into check here. And the time, this is the one that I find very interesting for myself. The time, if you have lifelong goals or yearly expectations, you should judge yourself on that time frame. Don't judge yourself on a bad trade, a bad week, a bad month. Judge yourself on that year-end return. That's going to be the difference. I listed what conservative trades are. Cash, T-bill, collar trades, protected puts, covered calls with long puts or deep in the money. I put equities in there because there's a bunch of equities that can mean, but something that gives you the opportunity to let it come back. Medium risk trades or spread trades. They should only be 20% of your portfolio at the most. High risk trades that are perhaps Vegas trades, straight long calls, straight long puts. It's a non-directional, well, it's a directional trade, right? Naked short puts. I would never do a naked short call unless you're willing to risk everything you have in the stock market. I call Vegas trades, or sometimes outside the box trades. A lot of these are going to be your jelly rolls, your butterflies, your iron condors. These are more of your Vegas trades, even though they don't reward you as such. Kevin, why would you call it a Vegas trade? The risk to reward. 25 to 40 to 50 risk for one reward. That's a Vegas trade. Doesn't make sense. New equities positions that I'm looking at: Walmart, Alaska Airlines, PayPal, Square, Carnival Cruise Lines, Royal Cruise Lines, MGM Grand, and Starbucks. I'm still going to see if I can't find something else, but I got about 380 stocks in the next 2 weeks that I'm going to go through and do my due diligence on. I will probably show this first time on next year. I still go through that 10-step or 14-step due diligence spreadsheet that I made up. Might be interesting to see if Options Animal still uses it. But I just spend 20, 25 minutes on a stock, and I just go through about 3 an hour doing my due diligence to see if any of these things that I've seen over time are important. Why do I do that? Why do I do it through Christmas? Well, because occasionally I see something like this on briefing.com. It was just an ad that says, hey, for 33% off on Briefing in Play Plus for the holidays. 33% off on what they offer. In fact, let's see if I can find it. Let me go back and see if it's still here. There we go. So Briefing in Play Plus, sophisticated investing ideas, live market analysis, market economic perspective, a full suite of calendars, custom portfolios, and alerts. So I clicked on it. I'm like, all right, let's see what this garbage is all about. Did my stuff, went through. Hey, some Steel Dynamics. And the first thing that was pushed to me was, hey, they've got this amazing dividend that paid like 8% this year, right? Is this the one that's supposed to be? Here we go. The leader sector rankings for their dividend portfolio. And you could have made like 9.8% in dividends. So I started going through what this is, what's in here. And I'm looking at how many shares I have in ranks and part of the portfolio and the yields and all this, garbage to a certain degree. And so I was like, you know what? Let's give it a peek. Let's see what's really going on here. I went to their first one, this Sinclair Broadcast Group, right? Beginning of the year, and the high of the year was 34.3, 34.31. Now sitting at 27.80. Only down $6.50 on a $34 portfolio. It's only down like 16%. And I thought to myself, why is it important to have this 2.7 or 2.8% dividend when year to date it's down 16%? You have to own the stock for the dividend, and it's getting crushed. Again, as I sent out gifts to you, one of those gifts was a fraud. One of the gifts is not real silver. It's shiny, it's pretty, it looks good if you dangle it in front of someone's face, but it's not a good investment. It's interesting because two people just typed in that maybe I should try VectorVest, and there's another one that's called Chart Income Plus. And I've already gone to both of them, and I'm not impressed in volatility for either one. I don't need something to give me blue or green or red arrows or whatever. It's very interesting that I'm going to do my own research. I could probably create my own fund better than these other ones. As I went through and I just kept pulling out some of what I was looking at, I just wasn't seeing a bunch of positions that were great profitable positions. This is 3 times less amount. It is up 16.76%. All their oils are down off a ton. Down 17.2% for Guess Jeans. What do you think on ExxonMobil? Great dividend payer, right? Year to date down 39.88%. Yes, the fund may have paid out 9.88% in dividends when it started, but the fund is not profitable for the year. It is a fraud. I'm not going to spend time spending money on briefing.com. There is nothing out there for most of you that have had an education that you can't do all of this yourself. For the big charting garbage stuff that's out there, I've seen it. You can't chart your way to income. And the reality is you yourself should be able to read a chart and say, hey, you know what? We've got some crossovers. We probably have technical crossovers right here, right here, right here. Read the charts yourself. I wouldn't be investing in stock pickers. There are times when it's not a good time to be in the market. Market advisories, 1 a week. That's your first red flag. Don't spend your money on that. It's just not needed. When it comes back up to the time, don't beat yourself up. It's okay to have a sideways year in the market. It's okay to have every position down if you've collar traded it. If you gave yourself every position down, you could probably have 100% the next year. All I'm going to tell you is this. Don't let it run your life. There's too much life to live to run and worry about your stock market positions every single day. If you don't have a system that keeps you from this, you do not have a system that offers you a, how do I say it? You do not have a system that offers you what's most important, and that's life. Trade to live. Don't live to trade. That doesn't work for you. All right. Dow Jones, still bullish. We probably have a little bit of a Christmas rally left. If we do get that stimulus signed, 1 or 2 day bump, and then we'll probably pull off of those highs. It was pretty neat today. Part of also what's helped us out today was the fact that we already had some protection in place. Not everything is protected. There you go. Not everything is protected. We've left Apple unprotected, but we do have Boeing protected. Smart to be protected in something that's breaking through support levels. 210, we might take it off. We have Disney protected. Actually, let's go to Baidu. We got to protect Baidu today with protection up at 200. Pretty neat to be able to protect some stock ownership at the highs that this stupid thing just can't seem to get above. Man, this bugger today was all the way up at 20, almost 201 again. Pretty neat to get some protection on it, since it won't get above 200 and keep going higher. Ford, we got protection at Ford, $9. Disney, 170 to 150. A little bit of downside put protection in place. We have ourselves ready for a changeover in our stock market. There are some things we don't have protected. We're not protecting right now banks. We're letting banks have some run. We're not protected. In fact, we added shares today of Bank of America. A lot of shares added on Bank of America. And we added them down at $29.12. Great place to be. Bullish on all of our markets, going to enjoy our Christmas rally into the end of the year. Not much is going on this week. Very little on earnings. GDP tomorrow, good GDP with stimulus. We'll have an up day. Markets are closed for a half day on Thursday and closed completely on Friday. So usually today is the big volume day. The rest of the week is usually no volume. We might see some volume tomorrow with GDP and stimulus. Otherwise, no volume on Wednesday, no volume on Thursday, nothing to pay attention to or that you need to worry about. Big decision, how far to let stocks run into Christmas rally. As you see, I've started to protect about 2/3 of our core positions. With that said, interesting article on that new virus strain from the UK. Please read through it. But we were down 1.94% today, finished down only 0.39. We made up literally 0.55%, 1.5%. We made up today as things were coming back. Interesting article on Pfizer, Moderna, how you will not be able to sue them, but they do have the vaccines on the counter for people to start taking now. Probably worthwhile to take it versus not, but each to their own on that belief. Very long article, please read through it. Here's the 5% on the Feds allow banks to resume share buybacks, why we jumped into some banks and why we're looking to reset our JP Morgan trade that we had out there. Someone asked, well, actually, let's go through questions. What questions do you guys have that I can answer since I won't see you for about 2 weeks? And a couple people want me to comment on some stocks. On AMD, I am not trading AMD. AMD seems like they have a long way to run, but AMD for me seems a little high priced. If I was going to be in this sector, you're going to laugh. NVIDIA probably makes more, but you might have some more opportunity with Apple than AMD. You might have some more opportunity with Intel than AMD, although Intel is really hating it. Micron. I would be in Micron way before I would be in an AMD. And last but not least, favorite I'd like over AMD is Western Digital. I might take a look at Western Digital before I'd look at AMD. So not a big fan of slim margins and just chips. I expect more out of my chip company than those. When it comes to Microsoft, Microsoft is surprised. It's an expensive stock at $222. As you can see, it hasn't regained its highs from the last 6 months. Not a bad collar trading stock. It loses about 10% on the way down. So it would be a good one to collar trade. Again, I don't trade Microsoft too often. If I was going to be in a tech like this, Apple, Baidu, PayPal, I would look to be in some of those versus just Microsoft. With that said, if I went and I looked at Microsoft on more of a yearly basis, it's kind of close to its highs. It had a good run. This year. I don't know enough about Microsoft to comment on it. Obviously, year-to-date change, 41.15%. Awesome return. I just don't trade it. I've got some favorites that I would do other than them. Apple, Baidu, and PayPal. PayPal being the one that's most expensive compared to the two. But I wonder if PayPal did better this year. In fact, let's take a quick look on all of them. Apple. Apple this year, 74.69%. Could be one reason why I like Apple better. Baidu, more opportunity. Used to be a cheaper price, 52.71%. And again, PayPal is the one that I would have thought would be my first, pick if I was replacing Microsoft with these. Pretty close. And PayPal has 119.77. So I still think of Microsoft as old technology. My three that I would have chosen ahead of them all seem to do significantly better than Microsoft did this year. But again, it's one I just don't trade very often. All right. So one more time. For some of you, maybe you have not received it yet, but I sent out some Christmas gifts. And in my card, I make the comment that one of my gifts to you is a fraud. So you're going to see some Hurley Investments silver coins. For my clientele, that's a way for me to say thank you. And you'll notice on that coin, it'll say 0.999 fine. Same reason when you have gold, it doesn't say pure gold, it says 14 carats, or 0.996, I think, is for gold. So you'll see 0.996 fine. That's how you know if it's real. If it says silver, if it says gold on it, you know that it's a fraud. You'll know that it hasn't been minted or stamped by something that is, it's not minted or stamped by a valid or a legit place. So Jim, when you get your Christmas gift, give me a call and I'll help you out. By the way, I received your letter today with the photocopy of the article. Thank you very much. Definitely need it, definitely can use it. So when you read my card, hey, one of these is a fraud, you'll notice that if you choose the Hurley investment coin as a fraud, I'm going to be crushed inside. Any other questions you guys have to finish out this year? If not, please enjoy your holidays. Please go ahead and don't give this any thought. Enjoy your holidays and think to yourself, man, thank goodness we've gotten through this year. I think you all should be very happy with your returns in a COVID pandemic, one that I've never seen before, an infested year. What an amazing job we were able to do to make some money and to be protected with the ridiculous uncertainty that, in all honesty, no computer program could ever tell you, no artificial intelligence could tell you. You just gotta get yourself through it. All right, guys, have a wonderful holiday season. January 4th or 5th, whatever that Monday is when we will come back to a market commentary, and we'll probably start our trade findings and adjustments the week after. I appreciate every single one of you that have come this year. Hopefully you've got some great information out of these. Hopefully you haven't taken my sassiness or my straight put it into your face kind of mentality. Hopefully it hasn't hurt your feelings too much or been too obnoxious to suffer through. Guys, enjoy your holidays. I wish you a Merry Christmas and a Happy New Year's. I look forward to talking to you again next year. Have a great evening. Have a great year, and I'll talk to you then. Bye-bye.